Hello, everyone. My name is Matthew Frailey. I founded Breakpoint Trades back in 2003. We've been providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like our mean reversion systems and, of course, our new KISS systems. Anyway, I wasn't planning on doing a video. I was going out of town here tonight, but market had a rug pull today, so I want to discuss that briefly before I get on the road, give you guys an update. Anyway, this is our back-end recorder for our standard web page newsletter format. So I'm going to go and get this started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is this out of the way. This is the Wednesday, December 20th newsletter. Guys, honestly, I wasn't even planning to really do a newsletter or a much of one today. I'm going out of town here. Once I'm done here, my wife's already out of town. They're waiting for me. But as you know, the market had a nice rug pull today. No one should be too surprised about that, but it was a pretty good pullback. So I just want to give you an update on things. Again, this is the newsletter for December 20th, and hope everyone is having a nice holiday. Anyway, I'm going to keep the newsletter fairly brief tonight. No new trade ideas, etc. Like I said, we finally got a rug pull today. The market was actually trading up. There was a lot of complacency out there. I've seen it even on some of the comments on our trading community. Market's been up so many days in a row. The indexes were been trading above their upper Bollinger Bands for 3 to 4 days, which is we had crazy overbought readings on RSIs, etc. Again, everyone knows we're overbought, and I've been talking specifically about the VIX. The Bollinger Bands were pinching, and I've been pointing out the negative divergence on the NYAD versus the S&P. So finally played out a little bit today. The S&P 500 closed down 70 points. That's a pretty big drop. And so also, I guess more importantly, that pullback is the largest pullback we've had since the late October lows. Since late October, the S&P has had two pullbacks, roughly 50 points. So today, 80 points breaks that symmetry. So that sets up higher odds now for the next rally to form a lower high. Now, Christmas is coming. So you're like, all right, well, market's going to recover and rally straight up. And that's possible. But another scenario we could see is we could see the market bounce back into Christmas, but form a lower high. And that would play out with symmetry. So just something to think about. Let's move on. Item number 2 shows the index sector table, what transpired today and this week. Not everything is updated on this table yet. Some things on stock charts don't update until later, but I don't have time to wait for that. So again, you can see the drop in the major indexes down anywhere from 1.5% to 2% with the Russell. And the indexes are now down for the week. Remember, they were up nicely, right? And out of the 21 market sectors, remember we've had positive breadth on the market. Every single stock was down, or every single sector was down. There's 21 of them here. So that was a broad-based sell-off. And you can see for the week, vast majority of sectors are down. Again, things are very stretched. I like to use the analogy the rubber band was too far stretched and it needed to snap back, and that's what we saw today. US dollar had a big bounce back today, up 0.44%. That, of course, helped things sell off as well. Cryptocurrencies were a little bit weak. Commodities, the DBC index was down 1.16%. It's still slightly up for the week. Crude oil still managed to gain a little bit. Natural gas is down. The ag area was down. Sugar, precious metals were down. They also pulled back with the market, especially with that rally in dollar. Gold down about 0.5%. Silver still managed to close flat. GDX, the miners, they underperformed, down 2.4%. Again, that area's had a heck of a run, but they led to the downside today. Now, then the market sold off today despite the fact that the 10-year fell and the 20-year bonds rallied. Next, item number 3 shows the economic news calendar. Tomorrow, we have initial jobless claims, GDP, Philadelphia Fed, natural gas inventories. Okay, let's jump to these charts, get this done quickly. So first chart below, item number 4, here's the daily chart of the VIX that I've been showing. If you've been listening to my newsletters since the week, and I've been discussing the VIX, I've been saying the Bollinger Bands are pinching. All right, I I just refreshed the chart. I noticed that the VIX chart hadn't updated, but I've been, again, so back to this, I've been talking about the VIX. The Bollinger Bands were really pinching. So I said, guys, the trend is up, but be careful with that. We had the RSI divergence. And also, I've been talking about the uncorrelation here. I needed to circle that, but the VIX had went uncorrelated with the S&P. That's this correlation indicator. And when it goes uncorrelated, it's not always, but a lot of times this occurs near inflection points, like here at the October lows, stuff like that. So that was really glaring. And today, now the VIX closed outside its Bollinger Bands, but that was something I've been showing for the last several days. Next. Image number 5, here's that 2-hour view. Next, image number 5, here's that 2-hour view of the VIX I've been showing. Remember this divergence I've been showing, this clean channel. You can see it finally popped out of that today. Moving average ribbons were starting to pinch here, and they're really pinched right now. Finally, image number 6, here's the NYAD advanced decline versus the S&P. Remember, I've been pointing out this divergence. This has been making lower highs, where the S&P's been screaming to a new high. That was a glaring divergence, and obviously played out today with a nice sell-off. And you can see in the past when you get these divergences, again, sometimes you just get a little minor pullback. Sometimes they're near major highs, but they're definitely something to pay attention to. And been showing that for the last several days since the weekend. And finally, chart number 7, here's the daily view of the major indexes. Like I've been stating, things like the S&P were above their upper Bollinger Bands for 4 consecutive days. NDX was the same. So things were very stretched. We've had a hell of a rally. So we had a nice little rug pull today. S&P closed down near its 9 EMA. That's the first support. Next, I did put out some hedge ideas. But again, you needed to be around today to trigger. And I know a lot of you are on holiday mode. Here's the SPXU. That's the triple inverse ETF for SPY. I've talked about this MACD divergence that was set up here. You can see these little tight dojis. They're kind of hard to see on this chart. I should zoom in a little closer, but you could have triggered off the high of one of these dojis here with a stop at the low, and boom, huge pop. You'd had RSI divergence built in as well. And chart number 9, here's the 60-minute view. Again, you can see this a little more clearly. You can see finally started popping there the last 2 hours of the day, and that was a heck of a move. Next, back to the major indexes. Here's the Dow again. It's just been straight up move. Finally, a little rug pull today. 9 EMA is close. That's your first support. Now, there's no divergence at the highs, so I am looking for the market to bounce again. But a first bounce point would be this 9 EMA. Now, if we lose that, then you have the 20-day. Next, image number 11, here's the S&P weekly. Like I said, one target we're going to hit eventually is this all-time highs, but looks like we need a little pullback first prior to Christmas. Next, chart number 12, here's the daily view of the S&P. Again, nice rug pull down 70 points. That's a big day, 1.5%. The 9 EMA is your first major support there. Again, we didn't have any divergences at the highs. Obviously on the MACD or RSI, but they were very overbought. 5 RSI was up around 92% or so. Fell all the way to 52.6% just on today. Next. Chart number 13, here's the KISS trend system. Obviously no changes here. Stop remains at that 4,600. Still plenty of room there to allow maybe a little pullback here before Christmas, before we bounce again without getting hit, in my opinion. Again, we were very stretched, and you can see the moving average ribbon here. See how wide it was? That needs to be worked off a little bit, just like it was too wide down here at the lows. Next. Chart number 14, here's the 4 time frames. So again, finally today we lost the ATR support on all 3 time frames except the daily. On the daily, the ATR is your first big support there. You can see we had some A's forming. That's amateur buying, chasing the rally. We had a DeMark 9 on the 130-minute along with an A and a DeMark 13 on the 78-minute. Next. Chart number 15. Here's a 60-minute chart, and I talked about this. So as you know, we broke out earlier this week, and I talked about that new high setting up a strong MACD divergence. Again, MACD divergence is not a sell signal on its own. You need some sort of trigger. But Obviously today, then we finally got that rug pull. Anyway, the point is, since the October rally, we had two major pullbacks, roughly 50 points. One was 49 and a half, one was 50 and a half. So basically the same. So today's 80-point pullback is the largest pullback. That now sets the odds at the next rally forming a lower high. So let's say we get a bounce rally attempt now into Christmas. It could form a lower high, something like that, before then attempting another move up. That's a possibility, guys, because of that symmetry break. Okay. Finally, Jabber 16, here's the 15-minute chart. Again, we broke out of that tight little coil early in the week, and then finally rug pull today. Next, Jabber 17, triple Qs, nice rug pull, 9 EMAs just below there. That's your first support, just like on all the other indexes. If that's lost, then you have the 20-day moving average. Jabber 18, here's the half-day chart. Again, I've been talking about this little fifth wave potential high up here. We had the RSI divergence. MACD divergence was still in place. Nice pullback today. 20 EMA on this time frame would be the first target around 400. Jabber 19, here's that 60-minute chart. Again, just like on the S&P, you had a really pronounced MACD divergence here. And the final chart, which I think is the most important, is this 30-minute chart. So I've been showing this rising wedge for the last 2 days on the Qs. Finally played out today. Look at that big sell-off. And also, this is a symmetry break on the Qs. This is the largest pullback since that October low. You see how these two pullbacks here were similar? Actually, let me take that back. This is the largest pullback since that low in December. It's not larger than that pullback from late November. But anyway, you can see clearly that wedge with the MACD divergence played out. Next, moving to the KISS systems, Jabber 21. Here's the daily KISS. Again, just like on the S&P, it's still long. Smart trailing stops at 390. Still plenty of room to give it. But again, we were stretched. You can see on the ribbons, stuff like that. Jabber 22, here's the 4 time frames. Again, just like on the S&P, we were quite extended. We had a DeMark 13 on the 78-minute, lost the ATR, losing the ATR on 130. We had a DeMark 9 on the daily. Next, Jabber 23, here's the Russell. Again, pulled back almost 2% today. You can see rejecting off that resistance area, not surprising. The first test of that again. All right, guys, that does it for the indexes. Now let's go ahead and move on. We already discussed the indicators like the VIX and NYAD. So let's move on to bonds. Here's HYG, high yield corporate. It actually held up better than the market today. You could see not a pretty candle, little inverted doji black candle. And in fact, that could be a little short trigger below that. You get a little RSI divergence. But again, it didn't pull back that much with the market. Market pulled back quite a bit. Jabber 25, here's that 60-minute chart. I've been talking about that bull flag, which played out. It made a minor new high, but that minor new high set up a MACD divergence, RSI divergence. Jabber 26, here's the S&P versus high yield corporate. The two move together. You want to look for divergences. No real divergences except for today with the S&P pulling back quite a bit and the high yield did not. Jabber 27, here's the 10-year treasury yield, was down today, so the market sold off even with this down. It is getting oversold as well, though, so be aware of that. We could see a bounce in this at any time. It simply followed its 9 EMA all the way down so far. Following up with the market sectors, again, I'm only going to look at a few of them here, guys. XOK pulling back nicely. Closing right on or just slightly below that 9 EMA. You can see the prominent MACD divergence there. Jabber 29, semiconductors, big rug pull back to its 9 EMA. Again, I've been talking about how wide that moving average ribbon is. It needed to be worked off. Plus, you had a black candle doji here. You could have triggered off a short there. You needed to give it a room for a couple days, but it obviously, that trigger with a stop at the high would have played out for a nice short, wouldn't it? Again, these ribbons are pretty good guides and they pinch. You look for nice strong moves whenever they're too wide, you look for mean reversion. Like it's too wide here, that was a low. Too wide here, that was a little top. Too wide here yesterday, this week, and now we got a little rug pull today. That's how you use that MA ribbon as a guide. Chart 30, XLE Energy, again, almost most all sectors pulled back today. Energy got nailed as well. Moving on to commodities, here's DBC down 1.2% today. Nice bearish engulfing candle. Again, the 9 EMAs right there. We rallied off that demand zone down there. Now we'll see if we can form a higher low or not. Chart 32, crude oil. Crude oil still managed to gain a little bit today. Again, nice move off that demand zone. That was the area to buy some. This held up today pretty well. Obviously, the energy stocks did not. They tend to lead, though. So I wouldn't be surprised if we start seeing a pullback in crude oil. Chart 33, natural gas. Nice pullback today. You know, we had an oversold bounce condition there, but it kind of has a bear flag look to it. Chart 34, there's the weekly. Chart 35, copper. And still testing this resistance area here. Chart 36, DBA, still in the coil pattern. Nice pullback, but still in the pattern. All right, moving on. Chart 37, Bitcoin. Again, it's still stuck up around this 50% fib area. No real changes. As far as the crypto stocks, they all had big follow throughs again today, but pulled well off their highs. I mean, Mara has been one hell of a trade for us from the 1050 area all the way up to in the 20s. I'm no longer long this thing, but man, what a ride. But nice pullback today. By the way, these RSI divergences were blown out. You can see the RSI made a new high. That's why divergence is not a sell signal, because it can be blown out. But it's something to use. You need to trigger off divergence. Okay. But again, nice little rug pull today off the highs. Chart 39, Riot. Nice sell off as well. Next, chart 40, US dollar. Nice bounce today to the 9 EMA. My concern here is the potential 5 waves down with the MACD divergence could lead to a larger bounce, which would lead to maybe a little more consolidation and pullback into precious metals and maybe even the market. Next, chart 41, gold. Slight pullback, still holding up well. My concern here is that could have been a wave B lower high, and we can still come down in a C. Or it could be more complex, form a coil, stuff like that. We'll see. The bullish view is a nested 1-2-1-2. Price cannot dip below that 1935 area, otherwise you have an overlap. Okay. Keep an eye on the ratio here. The stock's underperformed today, but the ratio overall has been uptrending lately. Chart 42, there's silver, was up today. I'm not showing the monthly chart, which has that big coil that I've been discussing. Chart 43, GDX, again, nice rug pull today, down 2.4%, so nice bearish engulfing over yesterday's candle body. Again, if you're long this stuff, guys, if you're swing long, your stop is likely way down in this range. For an uptrend, I'd like to see it hold maybe this group of moving averages. Chart 46, here's the 60-minute chart. We had that pop yesterday from that flag, coming down now. We had a MACD divergence of that recent high. Chart 45, BVN, one of the gold stocks I've been mentioning. Man, this thing has been on fire. Clearly some news, but it was up 6% today again. So, mammoth rally from that low. Was not affected at all by the sell-off in this group. Chart 46, RGLD, down 2%, pulling back off that resistance. Now, the next time it tests resistance, let's say we get a pullback here, and then it comes back again, I think that time it'll break. So, going to keep an eye on it over time. Let's follow up with some recent trade ideas. Again, a lot of these pulled back, guys, so I'm not going over much. I didn't add anything new. Here's Amazon spinning this coil. It did give you a trade. It's pulling back a little bit now. You know, you decide if you want to take some, your profits or give it a little more room. Chart 48, Derm was a great long idea a couple days ago. Played out nicely. You know, this was one to have just taken profits on. Chart 49, Nerd Wallet was one hell of a trade. Nice sell-off. Again, if you're still long, maybe trail the stop below the 90 EMA at this point. But it's had, it's more than achieved its target. Sharper 50, AVGO finally pulling back. I said last night that doji there was a warning. In fact, it could have been a short, taken a one could have taken a short trade below the low of that doji with a top stop right above it, but very tight. It would have been a nice trade. Target would be around the 9 EMA. Jabber 51, Google had a great coil last night and it was up nicely today, but pulled, obviously couldn't go against the current and pulled way back with the market. Still above the trend line. Jabber 52, CTSH was one I said to take profits on as it had some sort of fifth wave high. Nice pullback. Or you could have shorted it. Jabber 53 VTR was a great trade last week. Now I am keeping an eye on it because this has potential for a higher low in this point, but I'm not long any at this point, full disclosure. Jabber 54, Massey, one that's been on the list since early November. Again, just trail the stops up below the 90 EMA at this point. It more than achieved its $100 price target that I gave it. Jabber 55, BYON, still holding up okay. Just half stops in place. Jabber 56, Peloton, a new one I put out last night, did not trigger, no trade. But again, this 670 area, if it ever takes that out, would be an area to go long. Jabber 57, NNOX, one from last night, tried to trigger today, came back inside the pattern. Jabber 58, HEMS, one from last night, did not trigger. So no trigger, no trade, but it still looks okay. I'll keep it on the list, see how it does over the next coming days, see if it recovers. And Jabber 59, HE, Hawaiian Electric, forming this base. It never triggered, but going to still monitor it here. All right, guys, we will see what happens tomorrow. Again, happy holidays, everyone. I am leaving tonight. I'm not sure if I'll be back tomorrow. Steve is back in town, so he'll be doing the newsletter. Again, happy holidays, everyone. Thanks for supporting Breakpoint Trades. We value your membership, and that's it. Take care.